Hello, and welcome to another edition of Stock Trek. My name is Alex Hughes. I'm an analyst here at Intelligent Investor, and today I'm joined by Jon Mills. G'day, Jon.
G'day, Alex. How are you?
Very well, thanks, Jon. We're here in Melbourne with the upcoming AFL Grand Final weekend.
Yep.
Any surprises over who you're supporting this weekend, Jon?
Well, I'm a Sydney guy, so it'll be the Swans. I was hoping for an all-Sydney final, but wasn't to be.
Didn't quite pan out that way.
That's good to see the Bulldogs finally make it to the grand final after so long. But I hope they come up short this year. Maybe next year.
Yeah, okay, very good. I know very little about AFL, being from New Zealand, but one thing we do know a bit more about is Reckon, which is our topic of discussion for today. And Reckon was one of your speculative buy ideas recently, Jon?
Yep.
So maybe to start the discussion, we'll run through Reckon's history. The business initially started as a reseller of the Quicken and QuickBooks software, but its business model has transitioned over the years.
Yeah, so originally it was founded a little over 20 years ago, and as you said, it was a reseller of Intuit's. It's a US company, so it resold its software into Australia and localised it for the Australian accounting standards, accounting rules and so on. But a couple of years ago, they realised that that wasn't a viable business model with the rise of the cloud and Xero and so on, so they ended that agreement. And they've basically gone out on their own.
Very good. And to go out on their own, it means that they have to invest in their own product and develop that into the future. So can you talk about what that means for their business?
Yeah, so previously they just paid a royalty to Intuit, about $5 or $6 million a year. And obviously Intuit spent all the R&D developing that product. Now Reckon has to spend a lot of money developing its own branded products, including the cloud version of its small business accounting software. And of course it has a couple of other segments as we discussed in the article, and we'll discuss further later on.
Okay, and so everyone's aware of the rise of Xero and how great its software is. So, and that sort of presents as one of the key risks for this part of Reckon's business, doesn't it?
Yeah, I mean, when you ask the man and woman on the street what they associate with Reckon, the first answer would be small business accounting software. Xero is the market leader in that area. They're dominating. Their product is the best out there. They're basically light years ahead of particularly Reckon, but they're also ahead of other competitors such as MYOB. But as we said in the Reckon article, Reckon is a lot more than its small business accounting software.
It's fair to say that this is the opportunity, isn't it? Because the market is fixated on the risk that Xero poses, and they have overlooked other parts of Reckon's business, haven't they?
Yeah, they have. Well, at least we think they have. The main attraction to us is Reckon's practice management division, and as the name suggests, it sells software such as Reckon APS and Reckon Elite, which allows accounting firms to manage their business essentially. So. Managing clients, managing their employees and making sure their employees are in the right place to service their clients, preparing tax returns, financial accounts obviously, and a number of other features.
And some of the, sorry to butt in there, Jon, but some of the qualitative characteristics of that business is very good, isn't it? They've got lots of the big accounting firms working with them, using their software.
So they have 3 of the big 4 accounting firms, and around 70 of the top 100 accounting firms in Australia and New Zealand. So they are the market leader, and they are continuing to gain more clients off competitors such as Xero and MYOB and others.
Okay.
So that, to us, that's the main attraction of investing in Reckon. I think from memory, it generates just over half of earnings before interest and tax for the Reckon business as a whole.
And one strong point about their product is the fact that it actually integrates with every software provider in the market, doesn't it?
Yeah, so one of the functions that it performs is it retrieves clients' accounts. So they could be using Reckon, they could be using Xero, MYOB, a number of other competitors, bring all the information across to the accounting firm and allows them to prepare that client's accounts and also the tax returns. It's the only software out there in that area that actually has that function. Okay,
so in some ways it is the Xero of the practice
management
space.
Yeah, in some ways. So the weakness that Reckon has in its small business accounting software is it's basically the opposite in its practice management division.
So, and they also have another part of their business which is a bit smaller but is still a quality part of the business?
Yeah, so the other segment is their document management business. There are 2 companies there, one called Smart Vault and the other one's called Virtual Cabinet. It's a document management business, as the name suggests, so it allows accounting firms and legal firms to store documents electronically and share them with clients, and clients can review them and make changes and ultimately sign them off, and it's all done electronically rather than in the old paper-based system. Yep. And that has a lot of, probably more growth potential than the other 2 segments because we're so early in the paperless office trend that has been going on for a while, but still still very early.
So I guess in a way, the crux of the idea centres around the quality of the practice management division. So maybe we could spend some time looking at the strengths and weaknesses there.
Yep. So I mean, its biggest strength is the high switching costs to move to a competitor such as Xero. The say Reckon APS or Reckon Elite, they're fundamental parts of an accounting firm's business, and so it's a lot of pain and a lot of trouble to try and move to another system in terms of obviously integrating that system, historical records, training employees, and so on. Although there are high switching costs, they have come down a bit recently as the model has moved from an upfront license fee and consulting fee model to a subscription-based model, like its other divisions. But still, you still have significant pain, as I said earlier, in terms of having to integrate the new system, learn a new system for the employees, and so on.
And I've heard that Xero is actually giving away their software in this segment to try and build a position in the market.
Xero's got a cloud-based version, whereas Reckon is currently spending a lot of money trying to develop a cloud-based version of its APS software. But Xero's giving away free, as you said, to try and get accountants to recommend its small business accounting software. And the idea from their perspective is to take advantage of network effects. If you're a small business and your accountant has the same software, then at least according to them, that you're more likely to keep that software rather than going to a competitor such as Reckon or MYOB and so on.
And the fact that they've been doing that for a few years really indicates the strength of Reckon's position in that market.
I mean, Xero is spending a lot of money trying to make it a better system, but it's still inferior to Reckon's APS in particular. There's another competitor, I think it's CCH, is also giving away its cloud version for free. It could be MYB, but no, I think it's CCH. But over the past couple of years, Reckon APS continues to get more clients and more accounting firms and generate more users compared to basically off the competitors such as Xero and so on. So it is a very strong business and probably will remain as such for the foreseeable future.
Yep. Okay, and it has been a fast-growing business as well, hasn't it, over the years?
Yeah. So Reckon bought it, I think, in 2004, and particularly over the last 5 years, I think users have grown at something like 19% per annum. Give or take. Yep. So it is continued to grow quickly. I mean, they dominate the market now, so it probably won't grow as fast as it has in the past, but they do have a pretty locked-in client base, albeit at I guess on the subscription model rather than the upfront fee basis. So.
Okay, so what are you worried about? How does your investment thesis fall over?
Well, if the practice management business doesn't turn out to be as good as we think it is. I mean, Xero has a lot of money. MYB has a lot of money. There are other competitors with, basically all Reckon's competitors have far more resources than Reckon. So if they spend enough money, there's a potential for them to really eat into Reckon's practice management clientele, and that's one of the cruxes of our case. So if that occurs, then obviously we'll have to revisit.
So the biggest indication of that may be an announcement from Xero, perhaps, that they have taken one of the big four accounting customers.
Yeah. Okay. And we'll see how we go going forward. I mean, like any recommendation, we could be wrong. We've got to continue to monitor it, and as facts change, when and if facts change, well, we may have to change our mind.
Okay. So. And is there any other announcements or anything that you're expecting to see from the company in sort of the coming year?
The majority of their development expenditure is on cloudifying Reckon APS and also continue to spend money on their cloud version of their small business accounting software, which is Reckon One. I would like to see them continue to obviously keep their customers in both divisions and continue to increase them. They've also got their document management business, which again they're investing a lot of money in. I'd like to see them continue to increase the number of clients in that division. But it's a long-term play. I mean, this is going to take a number of years to play out. And so we probably won't know whether we're correct or not for that period. So you've got to be patient.
One other thing, John, that we talked about before we came in here is the fact that management engaged some investment banks to assess opportunities for mergers or takeovers and that sort of thing. And I think there was perhaps some offers for the company at a much higher price, but management walked away from that.
Yeah, so around this time last year, they undertook a strategic review, and I can't remember the investment bank, but one of the investment banks advised them. And during that process, they received a number of offers, and obviously they rejected it. And when the market heard about that, you had a big decline in the share price, which is one of the reasons for the opportunity.
Yeah, which could in fact be a good thing for us as shareholders.
It could be. I mean, counting on a takeover is never the main reason to buy any stock, but it is another way that this recommendation could prove correct over time if they decide to sell up. I mean, the CEO and I believe the chairman own a significant amount of stock. And they did buy or increase their stakes after the share price declines earlier this calendar year. So you never know. I mean, people react to incentives, so if they get a high enough offer, I would assume they would take it. I mean, but that's all hypothetical.
Yeah.
So.
Well, John, I reckon we've done well by making it this far without using any reckon puns. So thanks for your time today, and thanks for watching at home.